States.
Now it doesn't look like it's recording. Okay. Awesome. So it is, let me just take a look. It is live streaming. We already have people watching live. Hi, you guys. Join us live on Zoom if you can. And then Angie, you'll be able to see if there's anybody popping in too, because you're host. So I'm going to let you guys take it away.
Wonderful. Well, thanks, Carrie. I have to say, Nikki, I'm excited when you text me ahead of time and said you're excited for the call. I know it's going to be a good one. So let's get right into it.
Yeah, well, I haven't had these kind of smiles on my face, as far as interest rates go in a very long time. So we are definitely headed in the right direction. So let's kind of get into the rates and then talk about what we're seeing on the streets. So first and foremost, from a rate standpoint, we go to our handy dandy little graph here. As a reminder, green means good, red means not so great. As we move up further on the chart, the lower the interest rates grow. So you can see that we've had a lot of movement in this past week here, which has lowered the interest rates quite significantly for a lot of people. If we take a look and we change this from a 30-day outlook to the 10-day outlook, this really tells you, look at that movement that we've had, huge days, just moving interest rates lower and lower. So the cause of this is a lot of reports coming out from the Fed, basically saying, hey, we're prepared to lower interest rates from a Fed standpoint. Now, as a reminder, and I always say this, although the Fed rate does not directly correlate to mortgage interest rates, it does affect the tone and the shape of the 10-year Treasury bond. The 10-year Treasury is what mortgage interest rates are based on. And as that keeps improving, we get to see mortgage interest rates lower. So it's been a really great week last week. I feel like I was saying Christmas came early, for all of us, and saying that interest rates are getting down into that low 7, high 6 range. We've been able to lock a couple people in on the high 6s, which is really great news. Couple things that are happening this week is we're going to get a new jobs report this week. The unemployment rate is expected to increase slightly, so that's not too bad. We're also seeing a increase in jobless claims. So in other words, the people that are applying for unemployment is going to be increasing. What this tells us is that what they're seeing is a cap to the spending that people are able to do beyond what their normal bills are. So they're spending on food, spending on gas, things of that nature. Those numbers are starting to look a little bit better. I don't know if you guys have noticed gas prices are starting to come down a little bit. So these are good indicators that interest rates from a mortgage standpoint are going to come down too. So that's great news overall. So as we continue into the new year, the Fed is talking about lowering interest rates from a Fed standpoint. They have a meeting on March 20th where there's going to be what they predict now is a 60% chance that they're going to lower the Fed rate, which will help us again. And then also by May 1st, they're talking about there's an 88% chance that they are going to lower the Fed interest rate. And also of that chance, 38% that they're going to lower it by 50 basis points or more. So in other words, 0.5% or more. So we've got a really good chance that interest rates are going to come right back down in the beginning of the year. So we can get prepared for an awesome spring, get prepared for, to get us through the winter, and yeah, all good things for that standpoint. Like I said, big smiles on my face.
I love it. Absolutely. So have you seen and have you already felt or seen the, reaction from buyers in the market based upon numbers?
Yep. So there's been some really, I would call it, good or favorable media coverage regarding interest rates, talking about them reducing. So that's started to stimulate buyers to come back into the market. We've seen a couple people come in and say, hey, this is what I've learned. I've seen that the media is telling me that interest rates are dropping. Is there any truth to that? Things of that nature. So we've seen a couple reactions to it. We expect that to increase over the next couple months as we kind of get through the holiday season and people start putting their foot to the pedal and saying, okay, we want something new for the new year.
Mm-hmm.
So
yeah. I love that. So, and I guess I would love if anyone has, because we had a couple people join with their cameras off. If you have any questions, feel free to jump on. I don't see anything in the chat, but I think it's pretty important to talk about, how do we talk to buyers and sellers with this information? So let's say we have a buyer. Do we want them to wait till March or potentially May? No. So again, can you talk a little bit about the tools of what we can do? Like I just met with a seller last week and they're like, well, do we wait or, you know, spring market in Minnesota, we're in Minnesota is around Super Bowl. So February, March, you know, so what type of conversations would you encourage just based upon all the knowledge you have right now with buyers as well as sellers with all the information you just shared?
Yeah, that's a great question. So one thing to keep in mind when you're looking at, you know, buyers and or sellers is that there's a time lag between either when they get the home on the market or when they get pre-approved to when they find that house or when they sell their house. So it's important to know that that lag time is anywhere between 30 to 60 days on the normal, you know, cycle of sales. So in those 30 to 60 days, a lot can change from a buyer standpoint, interest rate wise, and a lot can change from a seller standpoint. On the buy side, let's just say they got pre-approved today and found a home tomorrow and they are closing in 30 days. Within that time frame, if interest rates are continuing to low during that time frame, we can lock them in at an interest rate and do what's called a relock. So let's just say they locked in at 7% today. They found their house, the house of their dreams, are closing in 30 days. They locked in at 7%. Well, 20 days from now, all of a sudden, that same scenario is now 6.75%, for example. We can relock them at that 6.75% interest rate before closing. So there isn't a lot of risk to the client of saying, oh, I need to time this exactly perfectly in order to close on my home at the best interest rate I can get at the time. There is the opportunity for them to lower that interest rate before closing so that they can go into those market rates as the situation continues to improve. We actually have done that twice in the last month on 2 clients, which is pretty good, you know, just lowered them at least down a quarter. And I think one, we actually lowered almost 0.5%, just based on the market movement. Part of what we do is we watch that interest rate for you. So we're constantly watching it as from the time that you lock in to the time that you close to look for opportunities for improvement and make sure that we can get you into that or relocked at that lower rate. Now, keep in mind that doesn't have to go the other way. If interest rates increase, they're still locked in at that lower rate.
Perfect. So what does that process look like if you were to take someone from the 7 to the 6 3/4 to relock?
Just basically it's a conversation that we have. We let them know that it's available for them. We ask them if they want to do it and we put the pieces in place. On our, you know, on the backside, obviously there's a little bit of negotiating with investors, things of that nature that we take care of. However, to the client side, it's like a no harm, no foul situation. They're good to go.
So there's no cost to buy. Yep.
No.
Okay. That's amazing. I just wanted to make that very clear here.
Yes, absolutely.
That's amazing. Yeah.
So it does become a real benefit to the buyer.
Yeah.
Don't forget that, let's say we do have a buyer who wants to do what we call a lock and shop. In other words, they want to get pre-approved and they want to lock in their interest rate before they find the house. That lock-in of interest rate is available for up to 4 to 6 months. During that 4 to 6 months, once they find a property, if they locked in again at 7% and in 3 months they found a home and they're still at that 7%, if that interest rate has dropped down, they can also do a one-time relock in their situation as well. So protect themselves from the interest rates going up, but also take advantage of the interest rates coming back down.
Yeah.
So that's important to know as well.
Yeah, there's so many conversations to be had. And I think that's the main point and why I appreciate you in these calls, because use the resources, use the tools, use the conversations, and understand that when we meet our clients where they're at, and our job is to educate and to give them all their options, a buffet, because right now they might not know enough or they only know a limited amount. And quite often, unfortunately, they don't have even the right information. Therefore, they're making all these decisions, which are kind of already emotionally with the wrong information, not the right information, or all of the information and all of the options and opportunities and understanding to really make this impactful decision. So I think that that's something to really point out for sure.
Yeah, absolutely. Absolutely. And then if we want to just look at, you know, kind of what are some things that I've heard like on the streets as far as mortgages go and questions that people have. I've had several discussions this week about down payment assistance, what's available through the state of Minnesota, what's available in other states, what we have available, you know, through our Loan Depot company, and, you know, just kind of how do we put those pieces together. A lot of conversations that I've had surrounding, okay, does it make sense for us to use down payment assistance if we have enough cash on our own? Now, with that being, you know, a lot of times what we really tell clients or tell buyers is that, yes, down payment assistance is available. It's available for first-time home buyers. There's assistance available for repeat home buyers. So keep that in mind. A lot of it is income-based. So if you are on, you know, depending on where your income is, if it's lower than 80% of the area median income for where you're at, generally there are some down payment assistance funds that are available to you. How they are structured, whether you have to pay them back, whether they come in the form of a grant, is really what we have to explore. When we do pre-approvals initially, we look at your whole situation and we do talk through whether or not down payment assistance is available to you or not for every client, just so they have that knowledge. Whether they choose to use it or not, depending on their situation, is going to be where we're going to put that strategy in place. But that is something that we check on each and every time we have a pre-approval come into our office and come into our team. So it's important to know that we're always checking for it. We're always there to help, you know, that type of thing, and take advantage of the options, if that makes sense.
Well, absolutely. And speaking, because I know that you're licensed in many, many states and you can work and connect in every state. Is this something that you do across the country with every single person that comes in based upon their location?
Yes, correct.
Okay.
So, you know, just to give a quick example, like in Minnesota, you can get up to $18,000 in down payment assistance from the state of Minnesota. We also, on our side, on the Loan Depot side, we have opportunities to get 5%, you know, for down payment and closing costs. We have opportunities to get a grant of up to $4,000, you know, things of that nature, where we can really plug and play with each client and say, okay, what's going to make the most sense for them? And does it make sense for them to even use down payment assistance? Because if they have their own down payment, we could possibly pile the down payment assistance on top of that to make their payment lower, you know, things of that nature, where we're using that cash most effectively. Keep in mind, though, most of the time, the interest rate on down payment assistance is going to be a little bit higher than what you would get in the market, because it is most of the time a subsidized interest rate to cover the cost of the program. So whether that be something that you have to pay back or something that comes in a grant form, depending on the down payment assistance form, et cetera, the interest rate could be higher. On the Loan Depot side, or on our side, the Loan Depot programs that we have for down payment assistance are not subsidized interest. So you're going to get the same interest rate regardless of whether you use the down payment assistance or not.
Another amazing tool.
Yeah. Another way. Yeah. Like, there's so many things that we can do to really help those clients get into homes.
Yeah. Well, and do you see, so even just outside of Minnesota and other states, that they offer similar opportunities and options with down payment assistance as far as what the state will provide versus what Loan Depot will?
Yep, absolutely. So in Arizona, for example, they have options for down payment assistance programs. Arizona has reduced the number of options that they have and really like honed in on saying, okay, you have like basically 1 to 3 options per borrower on what you can do from a down payment assistance options. They used to have a plethora of options, but as the interest rates have gone up and as the cost of the program has increased, they've reduced the number of options that they have. Their options are more on a grant basis that gets forgiven within the first 3 years of home ownership. So that's kind of an advantage that Arizona has. Florida has both grant options and repayable options that are very generous to the borrower. And keep in mind, there's also cities that you can get first-time home buyer money from as well. For example, the city of Minneapolis or the city of St. Paul, they have some grant options that you can get that are up to like $10,000 or $20,000, depending on your situation. So we can look by city, we can look by county, we can look by state. It really just depends on what, you know, how much we're looking at and what makes the most sense. Because as you start piling on these different down payment programs, the underwriting process, the approval process, things of that gets a little bit more complicated. And we don't want to put the client through I guess, loan torture, if you will, or documentation torture, in order to, if there isn't going to be a real seen benefit from it. So just keep that in mind as you're talking to your clients, or as you're sending them my way to get discussions on down payment assistance. Yes, there's tons of programs available. It's our job to narrow that focus and help them qualify and what's going to make the most sense.
Mm-hmm. Yeah, I love that. And I think too, what's kind of coming through, what I'm thinking as you're talking and giving all of this amazing information, is I'm thinking about all of these posts I'm seeing on social media where lenders are still failing at their jobs. I mean, badly. Like, it's blowing my mind that they're not doing what they should be doing. And so for any agent watching this, I just need you to, if you are on the other end of that, either end, buyer or seller, and this is happening, I mean, think about your business as an extension. I guess this is going to be a little bit of my mindset piece today, because what I learned early on, as you as the agent, you're the quarterback, we're in football season, we'll take that. So every single team member you have on your team is a direct reflection and extension of you. So it's like an arm coming off of you. Your lender, your inspector, title, the list goes on. And if you have a buyer's agent where it's helping you with showings, a transaction coordinator. So as you're building this team around you, and as I built my team, who you're in business with matters. And you want to have the best of the best. And if you don't right now, there is no obligation to stay with them just because that's always what you've done. You partner with amazing people that do amazing work and have all this information and all these options. As you build your team, you should be able to find a Nikki and find her. If you don't have one, go to her, because what you want to be able to do is hand off your client, not fully, but know that they are in the best care possible, if not as good, better than you could do, or you would be able to do. Obviously, in a lending point of view, you should stay in your lane. But what I say that is, I mean that the communication, they're going to be taken care of. That this person is a direct reflection and extension of you in your business. And I cannot believe, and it breaks my heart to continue to see that people are partnering with, especially lenders that have no business doing this business. And it's just heartbreaking.
Yeah, it is. I mean, we had a client come to us actually on Thursday of last week, because she had gone to Rocket Mortgage and had been approved for $350,000. And she was very confused by the approval, very confused by the loan officer and the language that they use. And she came to us to get probably her fourth opinion on what she should do and how much she should qualify for. And she had been to 3 different lenders prior to us. So the most recent being Rocket Mortgage. Rocket Mortgage qualified her for $350,000 and said, okay, great. You only need $12,000, cash to close or for your down payment, and you should be fine. Well, when she came to us, I was like, okay, that, something's not adding up here, but let's have you go through the application process, et cetera. Well, going through that process with her literally got her qualified for $150,000. So because we actually took the time to look at the pay stubs, look at the W-2s, not take face value on what the client thinks that they're making versus what they're actually making, on a year-to-date basis or whatever that is, and really talk to them about why their approval is where it is, what things we can do to improve that so that we can, help them to get up to that 300 range or 350 range. And really, what are those steps? They could have gotten themselves into a purchase agreement, at the 350 and never been able to close. And you think about a client like that, all the time that the realtor puts in, all the time that the lender puts in, all the time that the client puts in, providing documentation, saving their money, doing all these things, and basically they're not approved. That's super heartbreaking. So thank God she came to us before she actually found the house. And now we have to be, not only do we have to deliver the news, but we have to deliver the expectations or the explanation as to why it happened, and then set the expectation for how to get back into that qualifying range. Here's what you need to do. Here's why, here's what we're going to accomplish. Here's what, what debts need to be paid off, things of that nature, so that we can so that they can get into that home buying range. Luckily, we're not in an emergency situation. They have a little bit time left on their lease. But just those are the situations like you talk about where it's like you have to have that high trust or you're going to get buyers that are in situations. Keep in mind that, from a Rocket Mortgage standpoint, not to necessarily pick on them, but just the facts are the facts. Their loan officers in general have less than 6 months of training under their belt, 6 months of time in the industry under their belt. That's really, really, really tough for them to be in a call center situation, only knowing mortgage for 6 months, be able to basically plug in numbers and expect a result when they don't have the time and experience needed, and especially in this market, to really effectively pre-approve buyers. We don't just see it on the online lenders, we see it all across the board. Right now, it's renewal time for mortgage lenders. I think I mentioned this. And so we're expecting quite a significant decrease in the number of lending mortgage loan officers that are going to be continuing in the business, which really will help to kind of, help us to be able to better serve our clients, because there's going to be less of us out there. In other words, the experienced ones are the ones that are going to be out there to help your clients and help work with them.
Yeah, no, I love that. Well, and quick before we go, do you have any things that we as agents can watch out for? Either we're getting a pre-approval letter on a listing from a buyer that's a red flag, or we're starting to work with a buyer and we get their pre-approval letter and it's not our vetted person, because at least in my state, you can't dictate who your buyer uses. They can use whomever they choose. So any red flags that we as a buyer's agent or listing agent with these pre-approvals can look out for that we might not know right now?
Yeah. I would definitely encourage you to have a conversation with the lender that's listed on the pre-approval letter. Have a conversation with them. Figure out how long they've been working with the client. Ask them the pertinent questions. Have you ran them through automated underwriting? I'm sorry. Have you collected the income documentation? Is this based on verified information, or is this just based on, maybe you've done a loan for them in the past, or whatever that is? All those things are going to be very important for you to find out. A lot of our clients happen to be repeat clients, which is great. It helps us to kind of talk to those listing agents and say, hey, we've helped them before, we can help them again, that type of deal. But even if it's not, it's important for you to have that conversation. It doesn't matter if it's a local bank. It doesn't matter if it's Rocket Mortgage. Can you get a hold of the loan officer? Are they available to answer the questions for you? And do they have the time and experience to get the job done for your client? And make sure that that experience is really good for them too. Because like you said, that loan officer is an extension of your team, even if it's just temporary. Even if the buyer says, I want to use this loan officer because it's a friend of mine or whatever that is, that's still an extension of your team for that time period that you're in a transaction. So it's important to really dig deep and really on the listing side and the buyer side and say, okay, who's this lender that I'm working with? Are we going to get the weekly updates that we need? Are we going to be able to have the communication? And most importantly, if something does go awry, because nothing's perfect, nobody's perfect. We can't possibly see everything in every situation, as you guys know. But when that happens, as rare as it is, what's the solution? How are they going to act on the solution side? How are they going to get to that solution? Are they going to avoid phone calls, which I've heard? Are they going to avoid updates? Are they going to not come up with solutions? Are they going to say, there's nothing I can do, they need $10,000 more, things of that nature? Or are they going to really work hard and make sure that, yes, mortgage is messy, but we can come to a solution that's going to work and get this deal done and make sure that the buyer, is still benefiting from the overall process.
Yeah, no, that's such a good point. I almost got kicked off a transaction once because they wanted to use their bank from, I think it was Kansas City, and they had moved up to Minnesota. And this loan officer said to my buyer, if your realtor contacts me one more time, I'm not working on your file, because she would just all of a sudden disappear. And I'd be like, hello. She'd be like, oh, my kid was sick for a week. So she literally did not touch the file for a week and no communication. So, and I just know, and I know that some things go awry when it's not with the preferred lenders or lenders I know. And I finally, I come to realize that the difference between the two, having a Nikki and having just a lender that you don't know and something goes awry, is they take no for an answer, where Nikki goes into solution mode and finds the way, if there is a way. So many lenders out there, what I find, not so much, I mean, I'm generalizing, but many that when there's issues and you run into these things that can't close or can't happen, or this came up, it's they're going through their chain and it's like, yes or no, follow this path, yes or no, follow that path, yes or no. And when they hit a no, they're like, oh, can't go anymore, I hit the no, so sorry. But there's always a way if there's a way. But so many, what I found is so many lenders that I work with that I'm not as familiar with take no for an answer and don't go to the possibilities and the options and the opportunities and the maybes and let me check.
Yeah. And, you know, from our standpoint, our pre-approvals are pretty darn solid. We do a lot of work up front to make sure that we have the documentation needed. If there are questions, we answer those questions up front. Preparing the buyer, completely preparing them for a really, I don't want to use the term arduous, but really like in-depth upfront process so that when they do find that home, we don't have any surprises. That's our form of preference. We like to take care of problems early and make sure that there are no surprises when they do find that home. So when they do go out shopping, it's a yes. It's not a maybe or only if this works out, or yeah, they have to save $5,000 more. It's like, no, we want to make sure that we have the plan in place. Everything's ready to go. And we're just plugging and playing from a property standpoint. You know, that makes it a lot cleaner.
Yeah, that is why it matters, and it's important who you partner with. And if you don't know the lender, I love that. Call them, understand at least what you're dealing with and working with. We're all energy. You'll understand if they're like right away what you're gonna maybe need to step up your game a lot if it's not a Nikki on the other end. So information is in the chat. Thank you. And Nikki's cell phone number, call or text her right away if you need anything, if you have a file with an issue, or if you have a new client. She's fantastic. 952-484-1584. And let's get these buyers taken care of. And I appreciate your time, Nikki, and we'll see you all next Monday.
All right, sounds good. Bye, guys.
Take care.